Hi, this is Prashil coming to you from Mumbai, and you're listening to the Equity Masters Stock Market Wrap Up. In today's edition, I'll be taking you through what moved the markets over the week. So let's jump right in. So we'll be taking a look at what's happening at Jet Airways. Also, defense stocks are in focus. Why? We'll also be taking a look at the Mindtree takeover by L&T. Oil companies have exceeded their capex targets. What does it mean for you? With that, we'll take a quick look at the broader markets. Global markets rose on optimism over progress in US-China trade talks. Back home, Indian indices too ended the week in green amid global optimism. With the markets out of the way, let's look at the key stories in focus today. Jet Airways' co-founder Naresh Goyal stepped down from its board on Monday, and the debt-laden carrier conditionally got a $15 billion funding promise from a consortium of bankers. This move will reduce Goyal's stake in Jet Airways from 51% to 25%. While Abu Dhabi-based Etihad Airways will trim down its stake to 12% from 24% earlier. The crisis in the airline was averted after the government asked the banks to help it from being pushed into bankruptcy and prevent thousands of job losses ahead of elections. It's not going to be an easy task. Jet Airways still has a debt of around 80 billion rupees. It has only 38 operational planes left in its fleet from 119. The pilots, who have not been paid since December, have threatened to go on strike from 1st April. Note that the airline has suspended operations on 13 international routes. Now, the company's top lender, State Bank of India, and its founder, Naresh Goyal, have reached out to private equity giant TPG Capital and US carrier Delta Airlines to explore the possibility of a stake purchase in the beleaguered airline. Meanwhile, on Thursday, Jet informed the exchanges that it has defaulted on repayments of external commercial borrowings due on 28th March. This was raised for working capital purposes. Now, the company attributed the default to temporary liquidity constraints and said that it has engaged with the lender for the same. Jet, in the throes of acute financial distress, has defaulted on loan repayments, lease rentals, and vendor payments. It has also delayed salaries, grounded planes, and laid off staff. Yet, on Thursday, it told its travel agents that it's reinstating more than 60 domestic flights between March end and April 25th. While the crisis seems to have been averted for now, it's still a long way to go till Jet Airways can fly in peace. In the news from the energy space, Indian oil companies Indian Oil, Hindustan Petroleum, Bharat Petroleum, and GAIL have exceeded their capital expenditure targets for the current financial year, having spent heavily on refinery upgrades, pipelines, and marketing infrastructure. The combined capital expenditure target set for all state-run oil producers, refiners, and marketers for FY19 is 893 billion rupees, of which they have collectively spent 827 billion rupees, or about 93%, in the 11 months through February. ONGC, which typically has a much higher spending budget every year than the other refiners, has spent about 80% of its annual target of 320 billion rupees. Its overseas arm, ONGC Videsh, has used about 85% of its target, while Oil India has spent 78% of its target. GAIL and refiners Indian Oil, HPCL, and BPCL have surpassed their annual target in just 11 months. BPCL has spent 121% of its target, while the numbers for GAIL and HPCL stand at 107% and 106% right through February. Indian Oil has invested 103% of its target. Refiners have been upgrading their facilities to provide low-emission fuels that will help curb intense air pollution in cities. They have also been spending on setting up new pipelines, depots, and retail outlets. Apart from that, Indian oil companies have been investing heavily in finding, refining, and distributing oil and gas across the country for the last many years to meet the mounting demand for fuel and feedstock. Meanwhile, economic expansion has pushed up oil demand by 3.2% during the April-February period of 2018-19. India is also hoping to increase its domestic oil output and reduce its dependence on imports by making massive investments in exploration and production. In other news, stocks from the defense sector were in focus during the week as Prime Minister Narendra Modi announced India's acquisition of space capability to shoot down spy satellites. The PM said that India has entered its name as an elite space power after an anti-satellite missile destroyed a live satellite in 3 minutes. The anti-satellite weapon, ASAT, successfully targeted a live satellite in low Earth orbit. Stocks such as Bharat Dynamics, BML, HAL witnessed buying on the back of this news. In his address, the Prime Minister said that Mission Shakti is an important step towards securing India's safety, economic growth, and technological advancement. The announcement comes as a huge shot in the arm for the domestic defense sector. Currently, 35% of the country's total defense requirement are manufactured within the country. The rest, 65%, is met through imports. Events like Mission Shakti have shown what India can do in-house. And I believe a huge opportunity lies in wait for India's defense manufacturers. Knowing that, how can you act on this, dear listener? Tanushree Banerjee, the co-head of research here at Equity Master, has zeroed in on 3 stocks most likely to benefit from India's defense wave. She believes that events like Mission Shakti are likely to be the norm rather than the exception in the near future. You can tune in to stockselectoffer.com to know more. Moving on, a few days ago, Larsen Toubro, that is L&T, signed a deal to buy a 20.32% stake in a mid-size IT firm, Mindtree, from VG Siddhartha, the owner of the country's largest coffee shop chain, CCD. Note that he was the largest shareholder of Mindtree. Now, Larsen Toubro also announced plans to acquire a controlling stake in Mindtree through an open offer to public shareholders. Now, asserting that the independence of Mindtree is important, Mindtree's promoters and co-founders are unwilling to share their shares in the company. Now, this has kicked off a hostile takeover bid of the mid-sized company by the much larger L&T. With L&T now holding over 20% of the shares and Mindtree's promoters with only 13% of the equity, the board of the company is now evaluating how it can resist L&T's advances. It will be very interesting to see where this battle ends up, as L&T's promoters have said that they will fight L&T and give it a difficult time. Well, that's all from us today. Before signing off, we would like to know if you like our podcast. Is there anything specific you want us to cover? We would love your feedback. Just visit equitymaster.com and drop us a line. We look forward to hearing from you. Thank you and happy investing.